I'm Neil, and this is Neil Invest. I am looking to invest my way to financial freedom in the next 10 years. I'm doing that using my Trading 212 portfolio, and I'm going to track the whole journey on this channel. Financial freedom for me looks like a portfolio of about £500,000. That's going to put me in a position where all the bills are paid, a little bit left over in terms of spending cash and enjoying myself, and that means that I then have freedom to choose whatever I want to do. In reality, I probably want to grow the portfolio to be bigger than that, so again, we'll track that over the course of the next few years and we'll see how we get on. So it's been ages since I've done a portfolio update, so I'm going to do that today, and we have got some significant changes in the portfolio. I have sold 4 businesses, 4 or 5. I've sold 4 businesses over the course of the last few months. I'm going to explain exactly why, what those businesses are, what impact it's had on my portfolio, what I've done with the cash that I sold the businesses with, where that's gone, and how we're tracking against the progress to reach that financial freedom number. So as I mentioned, Trading 212 is my preferred broker at the moment. I've held it for the last 3 years or so. If you're interested in using these guys, there's a link below. Feel free to use that. It means you'll get a free share if you click on that link and sign up. I will also, in the interest of transparency, but it helps with the channel if you're interested in doing so. Within this portfolio, I've got just short of £45,000. So I have invested 45,439, and the portfolio is worth 44,462. Now, I started this is in my 3rd year of holding the ISA within Trading 212. I held it within Hargreaves Lansdown before. I've got about £12,000 in that portfolio. So across the two, I've got about £56,000. Now, looking at this chart at the moment, you can see that I am 2.16% down, 982 quid. But also, it's important to remember that originally, I'm going to show you now, I held my account within an invest account rather than an ISA. I keep it within an ISA now so as to protect it from any tax implications. But within my invest account, I finished, click on history, there it is, and it will show you £1,587. So I sold everything out of that account. £1,587 was my gain, transferred it into the ISA. So whilst it does show that I'm currently just short of £1,000 down, I'm actually 500 quid up overall within my Trading 212 account. Now, typically over the last 100 or so years, we've seen 9-10% increases year on year. That's just not been the case over the last 3 years. That means that I've been able to drip in though, as those prices have been dropping. You see, drop it down to 3 months. Every time I top up, it goes down, then I top up again, then it's going down, then I'm topping up again. So continually picking up the businesses, the ETFs that I own at a cheaper and cheaper price. Now, I've maxed out the ISA for the last two years. We are in August now, and I'm only at 27% utilization, which means that I've only put £5,400 in. Reason for that puts me a little bit behind versus maxing out the ISA, but I do have a plan in place to bridge that gap. But the reason for that to date is actually booked a couple of holidays. I've not been abroad, have for work, but I've not been abroad with my family for 5 years. So I'm going away next week, Mallorca. So by the time you watch this, I will be in Mallorca, sipping on a nice frosty one. So I hope you're having a nice time back in the UK. And I've just bought a few other bits and bobs that I need to do, done the house up a little bit, spend a little bit of cash here and there. I'm proper tight. Always have been, does my missus' head in. I am tight. I earn a decent enough wage, and the majority of it goes into investments and savings most of the time. So for once, I've thrown a bit of cash at the house, which everyone's happy for. So that means I'm a little bit behind, but we'll soon catch it up. So here's the portfolio, as I mentioned. 2% down. Let's have a look over the stocks, and let's also touch on some of the businesses that I have sold. And I'm going to start on that, actually. The first one that I sold, I'm going to search it here so you can see the detail around it, as I sold Netflix. And I've talked about that in previous videos for months. I've been looking to get out of Netflix for months, and it's actually up versus the price I sold on now, as you can see. Going to history, we can see I sold Netflix end of May. That's how long it's been since I've done a portfolio update. So what did I sell it for? I sold it for $401. It is currently at $406. I sold it for about 5-6% gain, something like that. Nothing spectacular. And that was 714 quid. And when I sold it, I then used that cash to invest it into S&P 500. So I put it straight into the S&P 500. So if you look at my S&P 500 holding, it is now at £6,000. So it's by far my biggest holding. My second biggest holding behind that is another ETF, which is pretty much a replica of the S&P 500 at the moment, which is the All World FTSE. That's at just short of £5,000. So across those two ETFs, I've got £11,000 invested. So that's Netflix out into the S&P 500. And the reason I did that, I didn't want to be holding Netflix going forward. I'm not confident of its long-term trajectory and confident of how much money it's going to make in the future. £180 billion market cap with £31 billion revenue at the moment. Increased competition for streaming services. The growth of YouTube, hence why I'm here. YouTube is growing faster than any streaming service in the world. What we saw with Blockbuster, it went under. People thought that was the future. I am not an expert in this field, in this area, or in media. So I don't know necessarily how it's going to do going forward. It's a bit of a risky play. I didn't have that much money in there anyway. I bought it as a hype stock back in 2020, 21, whenever it was, when all of these things were flying through the roof. It was a stock that I was constantly checking when I was going into my portfolio. And when you have stocks like that, there's a reason for it. So it's gone. And I'm more than comfortable that it's gone. I do not mind the fact that it is up now to $427. It could go up to $4,000 and I wouldn't be bothered because it is too risky for me, for my tolerance, for what I want to do in my investing journey. So Netflix is gone and the portfolio is looking quite a lot bit condensed versus how it has been looking before. As I said, I've sold 4 businesses, so it is condensing down. So let's look through some of them. So 3M is down, and every metric you look at 3M, it's down on the day, on the week, on the month, 3 months, 1 year. What does it do on Max? Yeah, it's even down on Max. There is some concerns with 3M, some litigation that's going on in the background. People are saying that it's a bit of a dividend trap at the moment. I've got $1,000 invested into it. The dividend yield on it is 6.05%. As a result, some people saying it's a bit of a dividend trap. So we'll just keep an eye on it for the time being. I'm not massively concerned. It still delivers a dividend once a quarter and does what I need to do. We're not going to be selling out of businesses just because they're down. Now, we just want to let you know about an offer that Seeking Alpha are doing at the moment. They're only going to be doing this for a couple of weeks is what they've said. It is $50 off, whatever that equates to in the UK, off a subscription, a yearly subscription, but only if you use the link below. That will give you $50 off a year's subscription. Now, you'll get a week for free, so you can try it out for a week, see if it does you any good. If it does, continue. If it doesn't, just cancel it. No harm done. But it is my preferred platform for analytics for US stock. I think it is the best one out there. You can track your portfolio in there. You can look into financials going years back, balance sheets, everything for all US businesses. Really useful for it. And they've also got a section in there that helps you pick some businesses if you're interested in that as well. Some pretty good recommendations. Link below, as I mentioned. Feel free to use it. Now, moving down, that was, what did we do? 3M, Alphabet is up over the year. Amazon has done well over the last few months. Yes, 17% up over the last few months. Apple, one of my biggest holdings. The first business I bought back in January 2020. I'm 31% up, got $2,500 in here. September 12th, we have got the new iPhone coming out, so we'll see how that does for them. Aviva have struggled. They are down on the year, 11%. I've got Aviva in here in trading 2 and 2 for £600. I've got Aviva about £500-600 in my Hargreaves Lansdown account as well, so about £1,200. Twice yearly dividend payer, no concerns whatsoever. In fact, it is quite a bit down. I probably want to pick some more of that up. I'm not going to go through all of these holdings. You can look through them, screen print it, go back, do whatever you need to do. Johnson & Johnson merger going on there soon, but that has been down a little bit over the last week, month, 1 year period. 3 months it's up, but over the last year it's down 0.66%. Quarterly payer again, no concerns from me. Legal & General, another one, another UK business, down over the last year, 16%. But no concerns again. Now, the dividend in Legal & General comes twice a year and is massive, 9%. And the next one of those is coming in September, next month. So looking forward to that coming through. Lloyd's, another one, down. Interest rates going up usually means banks make more money. Usually means the stock price of that bank goes up. That's not been the case for a number of banks. It's just uncertainty going on at the moment. 11% down over the course of the last 3 months. Microsoft has just been fantastic over 2023. 3.7% up, 19% up on the year. So we're looking really good on that. Absolutely smashing the S&P 500 out the park. Microsoft is. Obviously, it's a big part of the S&P 500. Pepsi recently paid a dividend to me on that. Doing okay. No concerns with that. Now, that reminds me, I keep forgetting, I need to go through businesses I've sold. I have also sold McDonald's. Now, this is a bit of a different one. McDonald's I was doing really rather well on, and I was really rather happy with it. My McDonald's holding, let's go down to history here, was partial sold. Yeah, like about 1,600 quid worth of McDonald's. And I've always talked about that business, really liking it. If we look at the numbers, they are all good. 2.17% dividend, conservative yield, but the opportunity and yield on cost into the future is really good. 200 billion market cap, big revenue, 23 billion consistent, growing. I like the business model. I've worked in food for a big part of my life, and I can see that it has a future over the course of the next few decades. And I just gave you a clue as to why I sold it. Sold it because I worked in food over the last few years, and I still do. So there's a bit of a conflict of interest there, and I want to be as transparent as possible with my work and make sure that I'm not investing into businesses that are in the same sector as me. So unfortunately, that means I sold out on McDonald's. With that money, I bought realty income. So that's why I've now got £3,000 in realty income. I like the business. Delivers a monthly dividend, which I just love to see coming in. It is at around £5.70 a month at the moment. Now, having doubled my position into it, it's going to double my monthly dividend. So now, as long as I hold realty income, I'm going to be getting about £12-13 a month, which means every month, however successful or bad the month is with my other holdings, so long as they don't cut that dividend or reduce it, I'm going to be getting £12-13. I'm going to be getting double figures every month. So I'm comfortable with that. Like I said before, the Netflix cash went into the S&P 500. This one I wanted to put into more dividend generation because I was losing a dividend business in selling McDonald's. So that's what I've done with that. I'm going to tell you about another one I've sold now. That is Uber Technology. So I sold that when, look at the history. Oh God, that long ago. Maybe I did mention that in the previous video. So I did sell it in February 15th, day after my birthday. I ended it up a position that was £5.58 up. That meant that that was because I was waiting for it to get back into the green in order to sell that. So what price did I sell it at? $35.54. And what's it doing now? $44.83. So it's done really well. 6 months. But what can you do? Again, I'm not in the sector. The revenue wasn't coming through enough. I didn't have that much in there, 200 quid. I was concerned about it, so I got rid of it. Consolidated the position. That cash went into the S&P 500 as well. Another business I sold, I'll tell you about this as well, was PayPal. Now, this is just another business I told you I was going to sell, and that's exactly what I did. I only had 100 quid in there, but I was so far down on my position. Let's have a look. Yeah, 228 quid I lost on that, which is not big in the grand scheme of things, but big in terms of a percentage down into that stock. I didn't see it recovering anytime soon. Too much competition into the area. Not one I wanted to hold into the long term. Gone. Again, the cash from that, although it was just 100 quid, went into S&P 500. So we look across the rest of the businesses. Rolls-Royce, 100% up. 100% up. Told you it would be. Start of the year, I did a video to say that there's going to be 100% growth within this business, and there has. Now, careful with people that flaunt their significant wins and don't talk about their failures. I have enough failures, but I'm really happy with it. I did predict it was going to happen, and it has happened. Pre-pandemic flight numbers are back to where we were with pre-pandemic flight numbers. They've got a new leadership in place. The numbers are doing really well. The debt is going down. I continue to hold the business. I'm 100% up in it. I've got an on-paper return of 700 quid in there. More than happy with it. Tesla, all over the bloody shop. Up, down, all over the gaff. Over the last year, 20% down. Sometimes it's massively up. Look, 3%, 3 months, 26% up. Then 10% down on the last month. All over the shop. 450 quid here. About £2,000 in Hargreaves Lansdown. I do see a big future for it over the next couple of decades. Comfortable to hold it. And the last one I want to finish on is Virgin Galactic, because it's a bloody joke of a business. I'm sick of it. Done my head in. 1 week down 2%, 1 month down 30%, 3 months down 45%, 1 year down 54%, max down 78%. You can see where I'm averaged in there, $12.33. £278 is the value of my position. I am down £900, 76%. It shows no sign of recovery. Anytime it does start to show any sign of recovery, they dilute the shares again. This is despite good news. This is despite paying passengers starting to go into space. But there's just no growth plan for revenue going forward that is making people feel comfortable. A £1 billion market cap with revenue of £2.3 million at the moment. Everyone's freaked out. Everyone has sold out left, right, and center. I'm not gonna. I used to always say with this business, it's 50-50 whether it's going to disappear to nothing or do really well. I think it's 80-20, 80% being that it'll probably go under, 20% maybe it does have a future, but it's always part of my speculative play. Yes, I'm significantly down, but I'm not bothered. We'll just leave it. We'll see what happens with it. So those are all the stocks in my trading 212 portfolio. I'll do a Hargreaves Lansdowne one soon. Number of people have asked for a Rolls-Royce update with a little bit more depth to it. If you want that, let me know in the comments. Just let me know. I will do that if I get enough people saying that they want that. So just let me know. Thanks for watching as ever. And if you want to see the best dividend month I have had over the course of 2023, watch this video here.